Hi, everyone, and welcome to part 8 of the Intro to Economics review series. This review will be focused on types of business organizations. Much like the previous review lectures, we have a list of terms and concepts that we are going to work through. And as we work through those, we will start to see how those terms are related with each other. So up first, we have sole proprietorship. A sole proprietorship is a business that is owned and managed by a single person. Next, we have unlimited liability. So one of the primary negatives or weaknesses of this is that the owner has unlimited liability. So one of the weaknesses of a sole proprietorship is that the owner has unlimited liability. Now, what this means is that the hypothetical owner's personal belongings and savings are at risk. A partnership can actually help address this weakness of unlimited liability by spreading liability between two or more owners. In addition to liabilities, management and profits will also be shared between the owners of that business. Limited partnerships and limited liability partnerships are also going to help make it possible for some partners to limit their risk to only how much they have invested. A corporation can raise money by selling stock. Those who are legally recognized as having ownership in a company are called shareholders. Stocks, these are shares of a company that allow for limited liability of its owners. In other words, if you own shares of a corporation, you are generally only at risk of losing what you have spent to acquire those shares. One thing to note, and this will likely be on your exam, is that a large publicly traded corporation would likely prefer to issue bonds to raise new money instead of issuing more shares. And this is because an increase in shares will actually dilute the existing value of that company's stock. A merger, this is where two or more firms consolidate into one firm. Now, if the firms that are merging offer the same kinds of goods and services, this is going to be considered a horizontal merger. Sprint and T-Mobile, their merger, for example, would be a horizontal merger. Next up, we have multinational corporation. So this is where a corporation has locations in other countries or branches in multiple countries. And this is referred to as a MNC, or like I said, multinational corporation. Some examples are going to be firms like Ford, Apple, Google. Now, a franchise, this is going to occur where an individual or ownership group has the ability to pay for the rights to sell a company's goods or services in a certain area. That would then be the franchise. And some examples of companies that offer this opportunity would be firms like Liberty Tax, McDonald's, and Subway. A nonprofit organization, this is going to be a firm that's structured like any other business, but it pursues other priorities and goals than profits. So if you think about a nonprofit organization, some examples are going to be things like charity groups or even universities. Now, that concludes part 8 of this review series. I hope this was helpful. I tried to keep it short and brief and to the point as usual. If you have any questions about any of these terms or concepts, please feel free to leave a comment. Thank you for watching and good luck with your exams.